Howdy. It's Wednesday morning here, just briefly after the markets have opened, and I'm just going to quickly go through my current plan because, hey, we're just continuing the story here. So we had that big drop to the downside come Monday, and kind of realized that I got to make some decisions whether I'm just going to hold on to this TD Bank stock for the long term and just hope for a correction over a longer time frame, or is it going to be time to minimize some of the losses? What's my own personal choice with this holding? And It's kind of a wait and see. It's kind of a watch the price action unfold. So right in here, I have it zoomed into the 2 hour. I'm going to even go into a 1 hour time frame and just kind of see what I've done. I mean, I just drew a little bit of a support line in the short term, and I drew a little makeshift one here. This is the first candle of the day, so we didn't break through this trend line just in an hour sense. Just looking to kind of break this downward cycle. The momentum is coming to the upside here, so we're kind of jostling between this area. And for me, I still have my stop market set if it continues on to the downside, and I guess it's the risk I'm willing to take right now. I want to. I suspect it's not going to just be a straight downward turn. Let's say that the market has a correction, the overall market. So I don't necessarily need this money. I'd much rather hold on to my position and keep it moving upward. And then if I could see some bigger indications that, hey, we've exerted the momentum to the upside here. Like, let's say that these bars are now in this upper echelon and we're up in here. I might close my position at that point, and then yeah, that's kind of what I'm hoping. I'm hoping that we have a little bit of a bounce back here, and that's why I drew some of these lines. They don't make sense unless you kind of appreciate it on the time frame that you're looking at. So with most moves, down or up, if this is truly, let's say, the bottom of this wave, and we're gonna have a little bit of a bounce back, it has to be. It has to be. Well, it doesn't have to be anything. I mean, it could be. It could follow a Fibonacci pattern where it could have a bounce back, let's say, to the 618. So some traders might be looking at something like that. So some type of play right here before let's say it does go like this. Let's say that it continues on downward. I'm not really sure what it's going to do, but overall, there's a lot of bigger fundamentals that put fear into the overall market stability, and it's been going on for a long time. I mean, you always hear about the Fed printing more and more money, which is an attempt to just kind of pump the market up to prevent it from falling or failing. And I guess that those tactics can only work for so long. But I'm not going to pretend like I'm a great market strategist by any means. But for me, the general line here, you can see I dropped this dotted line. We opened up below it. I'm not going to just immediately close my position. I'm going to really look at, let's say, this 58.17 support right here. That's one of the lines, and also this little upward trend line right there. It's all we got to really go off of, and I already have my stop market set below here. So I've kind of set my plan in action. It's going to be to hold, and hopefully for some uptrend, for some correction here. On an hour sense, we can see that we're trying. We're trying to have a little bit. We'll see if we can break through some of these areas and hopefully have a little bit of upward action. And if it fails and continues to the downside, then I have my protection mechanism already set in place. So I'm really hoping for the opposite. Usually it should bounce back. What goes down must go up, and what goes up must come down. So the faster it goes in any one direction, you usually have a pretty substantial move the opposite way. And yeah, it's where we're at. So I think that's what I'll just leave it. I mean, I'm going to be somewhat watching this. I don't really want to see it get too much lower than 58.25, and if it gets in that range, I'm going to be, well, just it's going to be interesting because that's my position. But I'm going to switch out from this one. I think we're going to just jump to a whole different stock because that's the whole purpose. I wanted to go through a bunch of different stocks and just look at some of the general price action history and just kind of compare different ones, which are good stocks, which are bad stocks, what are some technical indicators that you can see. But I got kind of caught up in the moment here, and there's a lot of interesting stuff. So for me, and also I like looking back at my own content and listening to myself, and you can kind of find your own flaws and sometimes agree with your own rationale. And it's just good. It's just a good education when you're constantly trying to be better, to reflect. And yeah, this is an apparatus that I can do such a thing. So we're gonna switch right off of here, and it's Canadian National Railway. So that's what the chart analysis is gonna be today. And it looks like I must have looked at this at one point beforehand too. So let's just see. I mean, I might as well just lose some of this stuff here. Oh, who knows what I was doing. So I think I was doing some type of Fibonacci, kind of seeing the same thing I did on that other one. You can use these either way, but what you do is kind of draw a line from the up and see how much it typically... Oh, that's not the way I did it. Just exclude that. I'm not sure what I did here. But neither here nor there. Let's just leave that. Let's do it a little bit of Elliott wave theory, seeing if I could get much sense. Yeah, I think I was right here actually. When the last time I looked at it, and it must have had a little dump. I was considering buying in when it hit this trend line, and it looks like it had a pretty bearish candle there on the monthly, but only to be regained back. But you can see here that this chart right from 1997. So a good long-term support here that it's respected throughout its whole history. We have a pretty good upward trend here, and up until recently, we haven't had much shift to the downside. So you can see that it's in this another one of these zones here where it's losing the trend, and now it's just a matter of, well, how long before we just get picked up again. Guess where it was too, right? 2009. That's where these candles dip below for 1, 2, 3, 4. Well, 4 or 5. I mean, you could maybe say 6, 7, 8 if you wanted to. You have a clear close below that trend line, and looks like the railway system didn't get hit that hard in the 2001 correction, but it wasn't really part of that whole tech boom. So these look pretty minimal when we look on a monthly time frame, but even that's 30% right there. So a little bit more than you would think. Right here, what does that drop? 30%. %. And let's see the drop that we're on right now. 20%. So historically speaking, the railroad system, the railway, Canadian National Railway, CNR is a pretty good, pretty stable stock. I mean, to only have downswings of 30%, like that's pretty darn good. I mean, in a safety aspect, um, what can I say? I mean, it's pretty tough to measure volume in a monthly sense. I mean, you can kind of see that the trend is declining overall, which could indicate a bigger move up or down. We can kind of see that the monthly momentum here is shifting to the downside. You can see the MACD has rolled over right here, but it has been a little bit flaky. But we're going to need some price action to the other way, in my opinion, if it's going to start reversing. Right away, we can draw a few trend lines. And when I say trend lines, I mean support lines. So we already have our trend line here. Just a horizontal support to look at one of the last highs. And right here, we're already sitting on the other one. So right there, right where we're sitting is kind of a line in the sand. You could say it, yeah, quite literally, we're sitting right on the support right now. And so far, so good. I would also take note of, let's say, this level right here. Just going to switch this back to the cross so can get some prices. So right about 96.51, you could think that as soon as we don't make a higher low, we can suspect that maybe this is not going to be moving in the direction that we want to go into. So anytime that it broke down below here, this would be probably maybe a good place to put in a stop. But historically speaking, this has performed pretty well. So these might be pretty good places to add into your position. It does matter with the whole overall market. Goods and services still have to be shipped around though. Some companies are not affected as much as others, depending on what caused the market correction. So if it's technological, then those kind of companies are going to be the main companies that get hit the hardest. If it's housing market, companies associated with that, banking, those are going to get hit hard. If it's the whole economy, it could be banking, it could be a lot of different things, but it is somewhat relative to what industry is causing the collapse. I mean, everything will get hit. Sometimes things will get affected a little bit more than other ones that still have to go. So sometimes people look at things like McDonald's and alcohol and vice type of stocks during the decline, during any recessions. Those usually do well because people don't give up their vices when they're stressed out. They need those just to kind of persevere. So not that I'm saying the railroad system is a vice stock, but just saying that all stocks during these downturns aren't necessarily all equal in the volatility. When we looked at Amazon and Apple, you could see that those had much greater losses, but their gains are probably a lot bigger as well. So I could say overall, like this looks like a pretty consistent uptrend, especially once we get above it and it can hold it. It holds it for years on end. So depending on what your strategy is, I mean, sometimes you don't want to be catching stuff but until you see a clear change in momentum. So I wouldn't be entering in a position right here, right now, because on a monthly sense, we could still have some downward action. There's still a lot of room in terms of the buy-sell with the MAC and with the general momentum here to be going down. Just going to zoom it in to a weekly time frame and see what this looks like in this regard. So it's getting a little bit situated here. Just going to see if this might be an applicable thing. No. So as of now, I'd be looking at these levels in the short-term time frame when we're looking at a long term, we want to see it get back above into these levels. Um, on a weekly sense, zooming in and out, we can see it kind of break a little bit clearer. How it can break that trend and stay there for a couple weeks more at a time. Let's see here. I'm just going to change this estimated moving average to, let's say, a 55 and see if that maybe acts as a little bit better. Yeah, I like that better. You can see on the uptrend it clearly supports it, and when it breaks down, it might be a sign that, well, it's not going to kind of be moving upward as well. So right here also we could look at this line as something that it'd be really nice to get above it, and we can see right here we broke it once, we broke it twice, and we broke it 3 times. And the more times you start breaking it, the less it matters, hey? I mean, the less it's going to be stopped in its track from something like that. So right here on a weekly sense, we just tick to the negative, which means that there might be some downward action here as well. Not even like considering, I'm just trying to objectively look at this and not consider the state of the economy even. Yeah, we can see a clear turn downward here on a weekly sense, so I wouldn't quite be investing back yet. This looks like we're still good in terms of keeping this, so just gonna even zoom it up a little bit further on a daily sense, and yeah, we can see right here there's a couple more indicators, like when we have that crossover there. We can see it's not very concrete, but all the same, once they start separating and kind of coming down, you can kind of see that it's a little bit clearer. And we can see here on a daily sense, I'm just going to zoom up a little bit and see kind of the struggle a little bit more. So yeah, you can see that we've been struggling to keep above this longer term trend line of 20 years. So this line is pretty darn important. So once we failed it, here we failed it, we came back up and gained support, hovered around here, broke it once more, came above, broke, barely, and now we've kind of submitted defeat here. So I would say that this 55-day moving average is now going to serve as kind of a roof, or it's going to be a level that we're going to have to break back forward. We're going to have to break through it to go forward. Sorry, I'm not quite forming my sentences as perfectly as I can. I mean, right in the morning, my voice sucks the most. My brain hasn't fired up to full speed. But not making excuses, just looking at this here. So here, the momentum is definitely down. It hasn't really started to shift up the other way. So not quite the time to really buy more in my sense, but this looks like a pretty decent long-term play in my opinion. It's just a matter of timing your entries and exits. So it is like a pretty good one to be in, though. It's pretty stable. You're not going to see all your wealth disappear all at once, and that's sometimes good to have a mix in your portfolio. So you can look at these in different sense. I mean, when you're really looking at the long term, you can see that this has a pretty good, clear trend to the upward side, and it should continue to do so. I mean, there's not a lot of reasons it shouldn't, and you can see how it respects it pretty well. Like right here, the previous time, you can see it comes up, gets support right there, and boom, it has its next little run. So this might be the same kind of thing. Maybe Canadian National Railway, let's say, hits this marker, and really, I mean, I didn't realize that on a monthly time frame. I zoomed it out in the 55 monthly average. You can see that it is touching it right here, right now, which is kind of interesting. So that might serve as support in itself. I mean, not that I would totally base that off of that, but you could probably expect some type of support to be given right here. So I don't know if I'd really be real hesitant to drop this off, but we started to reach these ranges, it may be a little bit more of a safety net. Again, it all depends when, but I wouldn't really want to see a whole big crest here in reversal, but likely this is a good stock. I mean, unless you're trading a lot, the losses and gains with this one might just be easier just to ride out. But yeah, it's always nice to kind of set some lines in the sand and say, hey, I mean, this is kind of reversing the trend, right? I mean, we don't want to just be not following this trend here, so it should respect it in every sense, but you never know what's going to happen. I mean, the railroad system isn't going to disappear overnight. I know it's had trouble throughout the years, but it seems to continually gain value and make all-time highs. You're going to see here on a monthly sense that it's interesting to see how much downward action we might really have right here. And I mean, the last couple ones was right here, but for me, if I was holding this position, I probably would have wanted to. Well, it's tough to say you'd sell every time that it's here because you'd be losing out of your position, which isn't a great trend. So you could look at these as adding positions when it gets closer to the line, and when it starts lifting off like this, that's maybe where you wanna. That's maybe where it could take some profit if you wanted to. I mean, it's easy to say, you know. It's always it would be good. Let's say. If you bought right there, okay, you guys know what that is. Sell right there, and the same kind of thing. I mean, buy at the bottoms, you know, sell at the tops. I mean, it's easy to say. It's a little tougher to do because nothing is black and white with that sense. But ideally, if you want to be a little bit more active in your swing trades, that's what you're trying to do. Find low entry points and sell for profit. So right there, you could have said, yeah, we got some low momentum, we got potential, and when we came up to this side and you've seen it swooping over, maybe it was this kind of time to say, hey, man, I've gotten quite a good gain here. I've gotten 350% gain over, well, it was a long time, wasn't it? Yeah, it was a long time. 8 years or so. Maybe it's just time to, you know, sell, but you didn't really need to, but you can see, I mean, it depends how active you want to be. You would have lost 25% of whatever you gained, so you can always make a little bit more, but you don't want to just sell and buy at the wrong times and miss out on a bigger trend. So for most inexperienced investors, you want to just find stocks that look like this. You want to find the ones with clear upward trends, and if you're willing to hold on for long periods of time, you want to look for places that it's a little bit lower in the overall trend, and then you can kind of buy in and hold, and maybe set some stop losses, or maybe just set some lines in the sand that for you say, hey, I think that we could all agree that if we start seeing Canadian National Railway challenge some of these levels in here and start to break through here, I mean, that's not going to be good because there's not a lot of support. There's none. There's no support between $65 and $30, and it would be pretty much a free fall between here and here. So not that that's what I suspect will happen by any sense, but that's what you'd want to do. That's what I would do. I mean, you find good stocks with good upward trends, you buy them and you kind of forget about them, and you set a couple alerts to say, hey, if it goes below this level, I want to know about it, because what's going on that could make it happen like that? Is it just in its kind of correction phase before we continue on to the upside? Is it just going through a little ABC pattern and it kind of goes back up? What's really going on? But yeah, all these little downward movements are followed into this 1, 2, 3, and then 5 up. 1, 2, 3, then 1, 2, 3, 4, 5 up. Are we going in another 1, 2, 3, and then back to the upside? Yeah, so this looks like a pretty good overall stock. Considering the current climax out there, maybe you want to wait a few days or maybe a week or so and see how everything is doing. The momentum here hasn't clearly shifted on a monthly sense. It hasn't really shifted on a weekly sense. And on a daily sense, we're still kind of making more lows. So the good news is that here we got this one support right here on a low sense. So 103.28. This might be just a marker to watch too, right here, to make sure that we don't kind of break this one and start kind of trickling to the downside. But that's what I'm going to do for this morning here. Thanks for watching. Maybe I could just say, I think we're all just human, so I'm not completely devoid of emotion or adrenaline. And yeah, it's an interesting time in the market right now, and I think it's always a good time to learn. And the best way to learn is to participate. You can't really learn how to throw a ball if you never toss it. So doing it with small amounts is good, and never trade with more than you're willing to lose. And yeah, hopefully everyone has a wonderful day, and we'll be on to a different chart the next day. Okay, thanks. Bye bye.